Good morning, everybody. I hope you had a great evening. We're starting to feel a little fall in the air here. When the sun goes down, you can feel just the air just feels a little different. Heat's leaving the atmosphere. That's what that's called. Overnight, the biggest news is China's stock market. The People's Bank of China injected a large sum of money into the stock market, and it sold. The article said it's about 250 points above where it was at its lows a week or two ago. So that was the big news. All equity markets around the globe are lower, including the US's. Ours is off about 5, awaiting the housing start. News at 8:30 Eastern, looking for plus 1.18. And permits at 1.23. And they'll be looking at the single family. Multifamily has been going great guns and been leading to these big numbers. These numbers could come in greater than forecast. And if that is the case, it might help the stock market, which would hurt treasuries. So structurally, you can see we have rejected prices above 128. That's rejection. And you can see that we're having a hard time in this 28 area. So 24, 28 is the first sell. 31 to 03 is sell 2. Pretty aggressive on the buy side. Down to the housing start numbers, but we'll make 13 to 17. Buy 1. Best support, as you can see down here, is in the 4 to 8 area. So especially starting at 10. And then 5 to 9 for buy 2. And I still see a trading range market. I don't see anything here that can break us out. Ron Paul put a big article up that I posted in the room talking about how the Fed can't cut interest rates. We're walking a very, very thin wire right here, and I agree with Ron Paul. You sit back and you look at it. I mean, how can you raise interest rates with how fragile everything is? And the only bright spot in the economy is the stock market. And bear markets usually run their course over a year and a half. And we have an election in 2016. So I guarantee you the West Wing of the White House probably calls the Fed daily, reminding them, don't rock the boat. And it's going to be a tough call to make. The only thing that I've heard that makes sense from a strategy and looking over the horizon situation is that perhaps the Fed raises interest rates by 1/4 to 1/2 point, showing the world that they can do it. And with the European Central Bank talking about increasing their quantitative easing, with China fully engaged in quantitative easing. Japan's never been able to get out of it. Maybe it gives the United States a little powder where they could come back and do it. Okay, volume, most recent in the market's memory is at 5. Prior to that, it's at 57. So 158, even 158.04 is probably pretty good support. It is down to the news. We had yesterday's low at 05, so maybe stops beneath that. Give this one a little room. So 1 to 5 buy 1. And 21 to 25 buy 2. Structurally, right there at 20. So 19 to 23 is sell 1. 31 to 03 is sell 2. And the average daily trading ranges are coming in. They're not where they have been. So things are settling down, which is not bad. Gold was up overnight. Risk off investments because what happened in China made some sense. But again, we're just in a very, very tight trading range. There just isn't a lot going on. So yesterday we left wanting to sell 20s to 22s and 24s to 26s. I mean, it looks reasonable. So we'll make it 19 to 21, sell 1, 24, 26, sell 2. The housing start news could come in better than expected, so 110, 112, 1110, 1112 for buy 1. And we're going to put a question mark by 15 again, just like we did last night. Then 5 to 7 for buy 2, and we'll adjust after the news. Euro's off a little bit overnight. That's what the European Central Bank wants. Devaluing your currency so you can export more is a short-term fix, but it's not a good long-term fix. The long-term fix is increased productivity, lower taxes, less government regulation. And if we in the United States think our economies are regulated, it's nothing compared to what's going on in Europe. So the solution is simple: lower taxes, decrease the regulatory burden. And that's why when Europe can get growth of over 1%, they're ecstatic. That does nothing to solve their debt problems. It would do nothing to solve ours either. And we're moving into European growth rates of 2%, 1 to 2%. And we'll be able to work it down to 0 to 1% if we keep adopting European policies, which we seem prone to do. Okay, 90 to 111. We'll adjust after the news. Sell 1, and then 25. Sell 2. I think the market's headed lower. I do like the short side, as you all well know, because that's the side of that the European Central Bank likes. They're going to devalue that currency as best they can and as fast as they can. Some pretty interesting articles out on what is happening to Greece. The sell-off of state-owned assets has begun, and starting in 2016, the deposits at banks are vulnerable to bail-in provisions, where the depositors bail out the bank. That's for the shareholders to do, historically, not for the depositors. And so, I mean, things just cannot be comfortable, and you'll see that in the price of gold. You'll see that in a lot of different things. So it looks like to me that maybe crude has rolled to the October contract. So we'll go ahead and we'll get that done. I'll have to go back and it's the V contract. So we'll look at the E-mini and we'll come back to gold. Okay, the E-mini selling in London came right out of the 99 area. We've had resistance at 2100, 2107, and you can see that they managed to get stops above the recent highs right here, which is their job, and they did it at the opening of the overnight session and T period. It continued. One of the things that's just very, very difficult to emotionally come to terms with is, God dang, the market was strong yesterday. I want to be a buyer, but it's a play for stops. It is a trading range, and what has changed that would take the market higher here? Better earnings? No. An improvement in the regulatory environment? No. Interest rates have stayed the same. They haven't done anything, and they might raise interest rates. That's a big question mark. So we're in a 60 minus 2105 plus market, and we have pretty good buying against 75 right now. We have pretty good selling against 2100. So we've rejected prices above 97. So 99 to 01, sell 1, and we'll have to adjust it for the news, and 4 to 6, sell 2. On the buy side, because of the news and because of this little volume bulge down here, we're going to make 85, 87 buy 1. And 80, 82 by 2. So we'll put support 80 to 85 and resistance 2100, 2105 to get started. Like I said, we'll adjust it post the news. Okay, it's going to take a while to get things done. When I get finished with crude oil here, we'll have to go back and readjust that. Like a creature of habit, finish the E-mini, start my little routine to get everything up and posted. So we'll take a look at October crude. We're in the October crude contract. It expires, September goes off the board on Thursday. So 42.50, 75, sell 1. Could be a little short covering. 43, 43 and a quarter, sell 2. On the buy side, we're going to make 41.50, 41.75, buy 1. And 41, 41 and a quarter, buy 2. Wonder if the Fed will come in and start buying crude oil futures to save our oil sector, which is really, I think $200 billion worth of projects have been set aside for a while. And the Texas economy is strong. It's not totally dependent upon oil like it used to be, but that hurts. It's been a very, very strong sector for our economy. Good paying jobs, all sorts of things that are being sacrificed at this moment. Okay, it will take a bit to get everything up and posted. I'm going to get it done. We'll be back on the news on the half hour. Make our adjustment in housing starts. They're looking for plus 1.18 million and permits plus 1.23. The focus will be single family dwellings to see how strong that is. The multifamily dwellings have been strong and are expected to remain such. In a bit.